Hello, everybody, and welcome to the quarterly call of the Dash Investment Foundation for the first quarter of 2020. We'll first begin by introducing ourselves and our role in the DIF, and then where we're calling in from. We're quite a globally diverse team. So I am Amanda B. Johnson. I am a DIF supervisor and secretary, and I am calling in from Texas. Next, we will hear from Cole.
Hi, I'm Cole Allen. I'm a DIF supervisor as well, and I'm calling in from Florida.
Great. Next, we'll hear from Demelza.
Hello, my name is Demelza Hayes, and I'm an investment consultant to the Dash Investment Foundation, and I'm calling in from Liechtenstein in Europe.
Thank you. And now we'll hear from Haitham.
Hello, this is Haitham Abdel Karim, and I'm also a DIF supervisor, and I am based out of Eastern Europe.
Great. Next, we'll hear from Jan.
My name is Jan Heinrich Meyer, aka Ezra. I'm the CEO and founder of the Dash Embassy DACH and also a DIF supervisor. And right now I'm based in the northern part of Germany.
Fantastic. And Mike?
Hi, my name is Mike Lewis. I am the Investment Foundation's supervisor. I'm also a DIF Dash Trust protector, and I'm also a long-time Masternode owner. Thanks, Amanda.
Thanks, Mike. And finally, Spencer.
Hi, guys. My name is Spencer Kazara, aka Kodax. I am calling in from Wyoming in the United States and am a DIF supervisor.
Fantastic. Okay, so our agenda for today's call is as follows. We will first hear from our chair, Mike, about how we measure the success of the DIF. Mike will then give us a summary of the DIF's activities during the first quarter. And then we will turn the time over to our investment consultant, Demelza. And Demelza will give us an update on the DIF's strategy and its holdings. We'll then go back to Mike for a synopsis of the DIF's request for more autonomy in its current proposal. And then we'll turn the time over to Haitham Abdel Karim, supervisor, who will speak to us about the DIF moving a fair portion of its functions over to GitHub to increase our transparency. And then we'll close out the prepared portion with Chair Mike again telling us about the DIF's plans for the second quarter of this year. After that, we will take questions, which you can pop into the live chat box at any time during this call. So without any further ado, I will turn the time over to you, Mike.
That's great. Thanks, Amanda. So how will we measure the success of the DIF? We will measure the success of the DIF in the following three areas. We will look to act as a savings account for the network, and we will kind of look at the success or otherwise of the DIF, partly on that basis, on our ability to do that. The second thing that we'd like to judge the success of the DIF on is our ability to build and diversify the DIF's portfolio of assets in a controlled way to smooth out the extreme volatility that is inherent in the Dash price. And the third and final way we would like to measure the success of the DIF is in the performance of specific investments. So any investments that we make in blockchain, payments, consumer tech industries, we would like to be kind of judged on the performance of those. So our success will be measured in both hard numbers, bottom line, profit, revenue, growth, those kind of things, all measurable. But it will also be measured in more softer metrics, such as, does it provide a use case for Dash? Does it establish and further the Dash brand? And does it help build Dash partnerships with other ecosystem entities? That will be more important, especially as platform comes live during this next year. And I'd now like to move on to a summary of our activities during Q1 of this year. It's been a very busy quarter for the DIF. We've found it very busy in terms of private equity, and we've also found it quite challenging in terms of executing our rebalancing strategies. So I'm going to use this part of the call to kind of give a brief overview of how things have gone in both areas, so both the private equity part of the strategy and the rebalancing strategy. So in terms of the private equity activity, firstly, we took Demelza on board during the second week of January. And since the second week of January, we immediately had Demelza start work on analysing a number of equity opportunities that were either already at the very early stages of the process, or that they were already well into the process, and we just needed expertise to look at these opportunities in more detail. So over the course of Q1, we analysed over 20 opportunities during that quarter. Out of those 20 opportunities, 13 made it to pitch. Of those 13 proposals, pitches, 8 of them made it past the pitch phase and on to further discussion and analysis. This further discussion and analysis was led by Demelza and the team, and we analysed everything that we could about these companies. So that obviously involved the sign of NDAs, it involved access to confidential information and data, and it took quite a bit of work for the team and Demelza to process all of the data on these 8 companies. So out of those 20 opportunities that were presented to us, we found one that we thought should be put to the network for approval. That decision proposal was submitted to the network in February to ask if you would like us to pursue an investment in BTC Echo. That proposal failed to pass by 70 net votes, and as a result, we have not continued any further with this opportunity. As of the start of Q2, we have no ongoing private equity opportunities at the DIF. I'd now like to move on to our rebalancing strategy and the challenges that we've faced, frankly, during this quarter. Our plan has been and continues to be to execute a simple rebalancing strategy to provide some stability to the DIF's balance sheet and to help smooth out the lumps and bumps that's caused by the Dash, the volatility of the Dash price. We've had continuing challenges trying to open accounts with financial institutions. The single biggest problem we have encountered has centered around around compliance, sorry. And it's really hampered any attempts to engage in the rebalancing strategy during this quarter. Simple things, for example, like every bank and custody provider or exchange that we've encountered or tried to open an account with has said, hey, you know, we need a bank statement from you, a company bank statement that shows that you're a legit company. And our directors' responses to that was invariably, well, if we had a bank account, we wouldn't be coming to you. So it's kind of a chicken and egg situation. We you know, which comes first? So we've had that problem to deal with, and then we've also been faced with the requirement for all supervisors to provide full KYC, and that's passport and proof of address, and that's in addition to the directors already providing that information. And we've also been asked to register as UBOs, which is universal beneficial owner, ultimate beneficial owners, with regards to all of these accounts that we're trying to open. Now, the big problem with that is that it's a big red line for the supervisors, because we are not the beneficial owners of the DIF. We have no financial interest whatsoever in the Dash Investment Foundation. So that invariably leads to an impasse. We cannot give the organizations, the financial institutions, the information that they want from us in order to open these trading accounts and these bank accounts and custody accounts, etc. So in summary, we've so far applied to open accounts with all of the major institutions and exchanges that you would expect. All have involved a lengthy process, and nearly all have resulted in us being able to unable to satisfy the compliance elements. So the unique nature of the Cayman Islands-based foundation company that specializes in cryptocurrency, and which has no shareholders and has no members, may be unique, but it also comes with its own unique challenges. So one question that some masternode owners may have is, well, why don't you just trade without KYC? Well, our response to that is, as a matter of policy, we will not trade on any exchanges without going through a full compliance process. The main reason, I think it goes without saying, is that it comes with an unacceptable risk to capital. Unverified accounts can be blocked, stopped, put on hold. They can otherwise be, we can otherwise find that they are unaccessible, or we can't access those funds for some reason. And there is no legal protection whatsoever against these funds being frozen. And that's kind of the biggest problem really we have right now. So we can't use unverified accounts, and we can't get accounts verified. So it's a very, very challenging situation the DIF has found itself in over the last 6 months since it was founded. In brighter news though, we have actually successfully opened a couple of accounts. The first one is with Vaultoro. For those of you who don't know, Vaultoro is a Dash stroke BTC stroke gold trading platform. It provides custodial gold solution. It provides gold solution, a gold purchasing solution, which is non-custodial. So you own the physical gold, and it's got your name on it, for want of a better word, in a vault in Central Europe. We have been able to set up this account, and it's now verified, and we are now able to use that account and trade with that account. And as and when the next trigger events occur within the rebalancing strategy, we will endeavor to use that account to start hedging some of our Dash position. The second account that we have opened is with Bitcoin Swiss. We've only found this out in the last couple of days. Literally over the weekend, we had an email from their compliance team advising that everything is good to go and that we now have a corporate account with Bitcoin Swiss. That latter account, that will assist us greatly in our efforts to execute the strategy fully. So with that update, back to Amanda. Thank you.
Great, thanks, Mike. So we will now hear from Demelza, who's going to give us an update on our strategy and our holdings. Over to you, Demelza.
Thank you. Okay, I'm going to go ahead and share my screen.
Okay. Okay.
So everyone can see my screen, correct?
Yes, ma'am.
Okay, so I'm going to go ahead and start right here. So even though Dash was very volatile this past quarter, it actually was effectively a bull market for Dash. Dash had a return of 101% during quarter 1, which is amazing given the fact that during the same period, BTC had a return of about 0.8%, so basically less than 1%. And this was also shown in the annualized risk-adjusted return measured by the Sharpe ratio, where Dash had a 2.5 Sharpe ratio. So this is very good when you put it in contrast to traditional equities and bonds. Now, discussing the strategy, when looking at the strategy that we've designed, basically we would be rebalancing into gold, and the strategy outperforms Dash when Dash is in a bear market. That is why this strategy outperformed Dash during 2018 and 2019. However, during the last quarter, since holding on to Dash was had such a high return, then actually the strategy that we had actually underperformed Dash. So it's actually maybe a blessing in disguise that we had all of this difficulty opening up these accounts because of the ultimate beneficial owner problem that Walter just explained. So we effectively held on to Dash the entire time, and we did have a 101% return in terms of dollars during the last quarter. If we had rebalanced, we would have had a return of 77%. So the return for the strategy would have produced a 77% return with a lot less volatility. So you would have had a much higher Sharpe ratio of 5.3, which is basically unheard of in traditional markets to have a risk-adjusted return that high. Now, discussing the strategy, just to go over how the strategy would have performed and how the DIF actually performed. This dashy blue color is the maximum drawdown that Dash had during the last quarter. So what this means is if we had purchased Dash at the highest price during the quarter, which was about $132 in January, on January 15th, and if we had sold Dash at its lowest price during the quarter, which was during the panic, the Corona panic on the stock market in mid-March, when Dash went down into the 40s again. So we would have had a maximum drawdown of about 70%. If we look at this mint green, that's actually what the strategy would have done. And because 70% of that portfolio is invested in gold, you don't have as large of a maximum drawdown. Now, the reverse is also the case. You can see, since we do have so much gold in the portfolio, that the strategy did not have the highs that Dash did. Effectively, this here is the Dash year-to-date return. In dashy blue, the mint green is the strategy, and the gold color is gold. So basically, gold was very stable over this period. It had a little drop of 5% in mid-March, but then it went up again. Dash had a phenomenal return. It went up 300%, and then it dropped back down significantly, and then did a slight recovery. And the strategy was as well effectively the same pattern between these two. So just to go over the return very simply, the strategy would have had 77% return. Dash had 101% return, and we were invested fully in Dash during that period. So we actually ended up having a higher return than expected. Gold also had a bull market, which was 11%. That is also very phenomenal for gold. This is in contrast to the 2019 return. In 2019, the strategy would have produced approximately a 17% return. Gold had a 15% return, and Dash had minus 40%. So the main message here is that when we're expecting a bull market, we want to have more invested in Dash, of course, obviously. And when we're expecting a bear market, we want to have more invested in this rebalancing strategy. And since we don't actually know what is going to happen in the future, the rebalancing strategy is a great way to capture some of Dash's return, but to minimize the maximum drawdown by having that stable asset gold that is uncorrelated in the portfolio. So just to go ahead and explain exactly what happened in the last quarter. The strategy says that we should have 70% in gold and 30% in Dash. So we started out with that allocation. As Dash had that huge bull run in early January, the allocation of Dash within the portfolio kept increasing every day. Around January 15th, it surpassed the 50% level in the portfolio, which would have triggered a sell. That's why you see here these two crossing. This was at the price of $132. At that point, we would have sold 27% of the funds of the foundation's Dash, and that would have been approximately $70,000 worth of Dash. We would have taken that $70,000 worth of Dash and bought into gold, and that would have taken our gold back up to 70% of the portfolio and our Dash back down to 30% of the portfolio. At that point, we would have bought approximately 45 ounces of gold. Now, you can see that this strategy actually basically timed the market perfectly because it sold at the highest point in the quarter one for Dash. And then what we had was gold going up in value and Dash going down in value. Now, you can see here in mid-March, we came very close to hitting the trigger to actually sell some of our gold and buy in Dash. So at this point, we would have taken some of those gold bars that we had purchased, 45 ounces, and we would have sold that and bought in Dash. However, we did not reach the trigger. In order to mitigate the risk of not reaching the trigger, people can write covered call options, and they can also do puts so that they can effectively reduce some of their exposure or increase some of their exposure in increments. We did have a call with a counterparty who was offering to take the other side of an options trade, and they are looking for minimum ticket sizes of about $1 million. So this is definitely a way to mitigate some of this risk in the future. If we had actually pulled the trigger, this strategy would have outperformed going long on Dash, and we would have had a return of about 150% for quarter one. The other issue is that there's no options market for Dash right now. So the only way to go about this is to find counterparties that are willing to actually buy the covered call option or to buy the put or to sell the put to the DIF. So we're going to be working with OTC desks once we get up to the minimum ticket size required. So to go ahead and summarize what happened in quarter one, we had basically a 100% of the investment in Dash, and we have finished out the quarter with 3,262 Dash, worth approximately $243,000. Over quarter two, we plan to start using our Vaultoro and our Bitcoin Swiss accounts, and we're going to diversify into gold. And the point here is that if you look back over the past 5 years, the exchange rate between Dash and gold was approximately 0.55 Dash for 1 gram of gold. Right now, the price is 0.72 Dash for 1 gram of gold. So what this tells us, if we assume mean reversion, is that either the gold price needs to come down a little bit or the Dash price needs to go up a little bit. And actually, when we finished quarter one, and I published these results to the DIF supervisors, the ratio was actually 0.77 Dash for 1 gram of gold. And at that time, I said either the price of Dash has to come up or the price of gold has to come down if we assume mean reversion. And actually, it already has gone in the direction expected towards 0.72. So we are hoping to get closer to the mean reversion before we pick up some gold in this portfolio. Going on to quarter three, we hope to continue to increase the amount of gold in the portfolio. And by the end of the year, we hope to have made our first private equity investment. We are actively looking at offers approximately 1 per week or sometimes more than that. So with that, that is all for me. And I hope to pass this back to Amanda.
Great. Thanks so much, Demelza. Okay, so now is the time that Mike is going to address us again, and this time he's going to talk to us about the DIF's request for more autonomy in its most recent proposal. Over to you, Mike.
That's great. Thanks, Amanda. Yeah, so basically in this part of the presentation, I would just like to touch on the request that we've put into the latest proposal, which is to request for more autonomy. We believe that in order for the network to really truly judge the DIF on its performance, we need more autonomy to kind of make decisions and show a track record of delivering results. Because as things stand, that there is nothing that we are doing that is of any significance in terms of delivering results for the network with regards to private equity and taking on investments to help further the Dash network. And we don't believe that will change under the current situation. We do believe that as well-meaning as the current setup is, that we get confirmation from the network every time we want to make an investment. We believe that it's created some unintended consequences, and it's become clear from feedback and discussion in all of the forums that a number of MNOs are coming from this approval process from the perspective of trying to analyze how good the proposal is as an investment and casting their votes based on this. This is a potential problem, and unfortunately, we've only just realized that as supervisors in hindsight. I just want to be clear that the DIF is not asking the MNOs to analyze the investment opportunity. Our team's already done that. We've already done the hard yards. We've put the hours and hours of time and expertise and due diligence into making sure that these investments are suitable. What we're asking for merely is permission to invest. This is an important distinction to make. That is how the supervisors feel about this. The reality is that MNOs are never going to have the amount of data and information and access to proprietary data and things like that that we are going to have. We have access to far more information with regards to an investment opportunity than we can ever publish to the network. That is why the DIF exists in the first place. It's to bridge that gap and allow us to do the due diligence that is necessary on these investments without it all being on public show, because private enterprises do not like their private data being on it's proprietary information. So the DIF is there to bridge that gap, and we strongly believe that if some MNOs choose to analyze these decision and investment proposals as investment opportunities that they want to analyze themselves with the limited data that they contain, then it'll be difficult to pass any proposal via this current mechanism. And the reason we believe this is because the MNOs will never have the data they need to make a sound judgment, or to make the best judgment with the information available. And the way we see it, and this isn't just me, this is the whole team, is that this lack of information will create an inherent risk adversity. And I think we've already seen that with the BTC Echo proposal. Lack of information means that you cannot make the decision with all the known information and all the known variables. And that in itself creates adversity, risk adversity. You are less likely to want to do something as an MNO if you don't have all the facts and the risks to analyze. So we believe that the current approach over time will result in suboptimal outcomes. And we believe, more importantly, that it will result in missed opportunities for the DAO. We hope that the network will agree to this request, but we will respect the decision of the network, and we will see out our terms as elected supervisors until the next elections in June. The current proposal that we have up runs for 3 cycles, and this will take us through to the DIF election period starting in June, and all the way through to the hopeful election of a new DIF board in the middle of July, approximately. More information will follow on those elections. We will be making an announcement to the network in due course. So we'll now move on to discuss the plans we have to improve accountability and transparency at the DIF going forwards. So with that, back to you, Amanda. Thank you.
Great, thank you, Mike. All right, so as Mike has said, we will now be addressed by Hytham, who's going to talk a bit to us about the DIF moving some of its operations onto GitHub.
Hello. So this is Hytham Abdel Karim here, DIF supervisor. And I was going to talk a little bit about one of the difficulties we had during the operations of the DIF. So in the ongoing operations, we realized that we were operating off of closed source platforms, things that only us as a team could see. And even individual contributors weren't really, their work wasn't really visible to anybody outside of the organization. So that was a big problem for us because in an organization like the DIF, you have to have information continuity. None of us is going to be here for forever. None of us is hopefully not planning to stay for much longer than is needed to add value to this entity. And we should operate under the ethos of an open source project. We are an open source opportunity. We are an open source foundation for the benefit of an open source network. And it just didn't mesh. It was like oil and water trying to get closed source information in an open source network. And the best solution that I could see, that I found that would work for us as a team, with respect to us being 6 independent supervisors that don't report to each other and don't work for each other and aren't really getting paid. We're volunteers. So it made sense to have something on an open platform like GitHub, where everybody has an ability, an opportunity to present their work to the network, because the stakeholders in this are not each other. It's not the individual supervisors that are the stakeholders to each other. We are stakeholders to the masternode owners and the network itself. So our work and our effort into the DIF and our contribution has to be open source and visible to anybody to come check out and see. Because with respect to us asking for more transparent or more autonomy comes more responsibility. Each DIF supervisor is going to have a vote, and that vote has to be public, and you have to explain a reason why you gave that vote. So we're switching into a more transparent process and more of an open source process, where anybody can submit a pull request and the supervisors will approve it. And once it's approved, it goes into a public repository, something that has been signed and agreed to and is public to anybody. And my goal is to hopefully have the DIF be almost like a masternode or a node on the Dash network, where as a masternode owner, you can just go to our public repository, download or clone our financials or our status reports or our updates, and have everything you need to know about the DIF just going to a GitHub repository that's public and is available. And everybody's votes will be on GitHub. And I really think that this is something that we're still transitioning to this to see how it works. I think it'll work good. I hope so. And I think it'll work for open source projects very well. And I'd push for other Dash funded organizations and for the Masternode network itself to start demanding that that proposal owners put themselves on an open source network where your work and your team's work shows up as individual contributors. So we don't get situations like where we had before, where other teams, as soon as the leader leaves, the rest of the team has no visibility to the network. So none of the Masternode owners know them personally, and there's no way to contact them or actually track their work. So I think this is something that's very important. GitHub is a platform. It's used for coding, but for us as a social part of the Dash network, we have to have a way to be able to track our work and our efforts in an open source project. And there's nothing better than GitHub. So I hope that that as we move forward and we start reporting our results and the DIF starts to report its results, we leave a solid track record and an open track record, even if it's in public or private repositories, if we can't share much of the data that's there. But at least we can share something that if another supervisor were to jump on board, it's just a login into a GitHub that accesses everything available about the foundation, its investments, and any conversations and decisions made by supervisors. So you have a track record and a history of decisions. So we don't have amnesia going forward in every project that comes in, or if a new supervisor comes in, that no supervisor is left in the dark about what happened before. You have to have a track record for this kind of stuff. So I'm very, I push for this greatly, and I think this is super important for us as an organization. You can't have a DIF records on Google Drive or whatever closed source. They're not our friends. It doesn't work for an open source project because you have to see the contributors that are doing the actual work. And I hope the Masternode owners will actually be happy with this transparency. And also, I'm running for the elections for next term as well. And part of my platform is going to be autonomy for the supervisors with accountability with respect to decisions made And if you don't like us, vote us out. But at least we have a track record that you can go point to our efforts and what we're doing. I think that's it. That's it from my end.
Great, thank you. Thank you, Hytham. I'm not sure if Hytham mentioned or not. I was looking at some notes, but what I think is cool that I just wanted to mention in case anybody didn't know is that I do believe that Hytham forked that repository that we're now using from a beta fund that's being run from Bloomberg. And so it's really cool, I think, that Hytham found a working example of something that we can hopefully come to adopt with time. Okay, so from here, we will finish up with Mike telling us about the DIF's plans for the second quarter of this year.
Great, thanks, Amanda. Yeah, so what are our plans going forward for the next quarter? Well, as I've already discussed earlier on, we are now coming up to the back end of our term as elected supervisors. So we will continue to work hard over the next quarter to basically fulfill on what we've been trying to do with the strategy. And if we can get every element of that strategy ticked off and sorted by the time we go to the polls at the end of June, then I think we would consider this quarter a success. So what does that look like in terms of specifics? Well, we're looking for the next quarter to be a lot quieter in terms of private equity. We don't really see the same level of inquiries as we have been seeing. I think we all know why. The global economy has literally fallen off a cliff. So yeah, we do expect private equity to kind of die down a little bit and be a little bit quieter. That's not to say that we won't look at and or consider anything that comes to our inbox, but we just don't expect the same level of inquiries. 20 plus opportunities. 13 of them we had pitch for us. 8 of them we did due diligence on. That's a pretty mega quarter for Q1. I can't see that happening again during Q2. So what we will be doing is focusing on other areas. Now that we have the tools required to execute on our rebalancing strategy, we will really kind of focus on that. We have a little bit of work left to do in terms of getting these accounts configured properly from a security and from a procedural point of view, because at the end of the day, the Dash Investment Foundation directors are the custodians of this Dash. Effectively, they are the directors of the business. So we have to work out protocols on how we do trades, and we do them safely, securely, and without potentially causing problems and or losing Dash or even worse, placing the wrong trade. So everything needs systems and mechanisms in place to make sure that we can operate properly. Getting the account openings was hard enough, but now we actually have the account openings. We have a little bit of work to do the next 2 or 3 weeks to make sure everything works smoothly in that respect. So what we'll do is once the market moves in our direction, as the melter has said, we will make those trades. We will diversify the portfolio as the strategy dictates. So what we hope is that the market is volatile enough for us to do this, but it is quite possible that the Dash and gold will remain quite closely pegged over the next quarter, in which case we will do nothing. So in addition to that, we will continue to pursue other account openings. This will provide us with more options, and it will provide us with greater redundancy as well as part of our overall strategy. Our plan really is to have at least one US dollar denominated bank account with a crypto-friendly bank. We would like to have at least one custodial cryptocurrency financial institution. We have that now with Bitcoin Swiss, but we're also talking to BitGo, and we would really like to get a BitGo account open. And then we would also like to get some of the major cryptocurrency exchanges on board. We are in advanced discussions with Kraken, and we do hope that will yield positive results during this quarter. We also plan to move now that we have a Bitcoin Swiss account, we also plan to move a significant portion of our current Dash reserves into custody with Bitcoin Swiss. The main reason for that is it's insured custody, and it's a great solution to making sure that we those funds are available no matter what happens. You know, at the moment the funds are on hardware wallets, and the keys are in a safe, and we have very redundant procedures in place on the Cayman Islands with regards to security of those Dash. But the reality of the situation is that those Dash are on the Cayman Islands, and they're securely held there. We'll putting them on the Bitcoin Swiss custodial solution, and maybe hopefully using Bitcoin Swiss using BitGo as well, will help diversify where our asset base is held. It's very unlikely there would be any problems anywhere, but as we all know, as Mastodon owners and community members, you can never be too sure, never be too safe about all the procedures that you put in place with regards to security of crypto and the keys. In addition to the other reason that we are moving the funds to Bitcoin Swiss is because we will be able to take advantage of the staking service that they offer, and we will also be able to earn a return on any Dash reserves that are currently held in account. We believe that that's quite important because at the moment we are facing an inflationary headwind with the Dash network. Any Dash that the network gives us is as is well documented with Ryan Taylor's proposals regarding in economics of Dash and the token economics of Dash and the inflation. So we're looking to take advantage of the staking service to help reduce the overall inflation trend that the Dash Investment Foundation's portfolio currently is exposed to. In addition, another thing that we're looking at doing this quarter is Demelza and the directors will, as I've mentioned previously, fully execute the rebalancing strategy. But again, as I said, this all depends on market conditions and when specific triggers are met. As Demelza pointed out earlier, we had a trigger on the 15th of January, I believe. But since the 15th of January, we've had no further triggers from that portfolio strategy. Maybe we will in the next quarter. Maybe we won't. But if we do, then we are now in a position to execute on that. As I've also mentioned earlier on in the presentation today, we have no plans to seek investment opportunities during this quarter. But we are, of course, open to analysing any opportunity that comes in that we feel is compelling enough. But we do anticipate a much quieter quarter in respect to private equity. And finally, our final plan during this quarter before the summer is to move forward with our plans to open source the DIF as much as possible, as Hytham has kind of presented on already. That's a big move for the DIF, and I hope that what Hytham has said has struck a chord with everybody. I believe it's going to be essential to make this work. We need to bridge the gap between decentralized networks, the masternode network, and private finance and the traditional finance world that we live in. I know that part of the reason that we exist as an entity, as a network, is to kind of is a better way than the traditional financial system, and that some of the maximalists, dash maximalists, may say, well, we don't need the traditional financial system, and we should just shun it completely. I think my view, and I think I'm probably speaking for all the other supervisors as well, is that we need to be able to work in a hybrid kind of way here. We need to be able to work with the traditional financial system. We need to be able to invest in private companies who adhere to the rules of the traditional financial system, whilst also sticking to our whole ethos, and what Dash is about as a network, and why we exist. So with that, I'd like to draw my part of the conversation on that to a close. So back to you, Amanda.
Great, thanks, Mike. So that concludes the prepared portion. For anybody who is interested to contact the DIF, of course, we have a contact form on our website, which is -invests.org. And then the inbox that goes to all supervisors is hello@-invests.org. So with that, I will take us to the concluding question and answer section of our call. We had 2 pre-submitted questions, and no outstanding questions from the live chat at this time. So we'll jump right into the pre-submitted questions. The first one is from Redditor Trust Thyself, and it goes to each supervisor, and it is, what has surprised you about being a DIF supervisor? So let us please begin with Cole.
All right. So the amount of compliance and account setup issues that we've had, I mean, everybody talks about how crypto is the Wild West, and that's how it's portrayed. And that hasn't been my experience here as a supervisor. It's, we'll be working with an entity and it'll seem like things are going well for once, and then all of a sudden they'll send back some questions that show that they have no understanding of what our organization is or what our purpose is. And it's really frustrating. But now that we're finally here at a turning point, I'm really excited. But that's where a lot of our focus has been spent, and that really kind of surprised me.
Great, thank you, Cole. And next we will hear from Hytham. Same question. One moment, let me pipe Hytham in. Thank you.
So for me, I'm an off-grid kind of guy, so I knew that the banks were going to be pricks about this. They weren't going to really help out that much, except maybe in Switzerland. But for what was really the surprising part was actually the operational, because usually we operate in a social way, and in a social environment, usually you interact with each other based on some need. Right? Like usually you work with someone because you're paying them or they're paying you, or your friends or whatever. So when we get thrown in together as 6 supervisors who really don't know each other outside of this entity, the operational stuff was kind of difficult to work with. Like I, for instance, have a philosophy that in open source, I don't want to use different closed source platforms. Most people outside of the development world aren't really of that mindset. Most programmers are kind of used to working in Linux and open source environments, while most people that don't work in that environment are used to using the fancy marketing apps like Google and Evernote and stuff. But the reality is the open source world provides much better tools to work with someone who you don't report to. So that took us a couple of months, and we actually started out on Google Drive and all these different closed source platforms. And it took months of seeing like stuff getting missed in terms of like ideas going out, and no real way to track what idea what idea happened when and by who. So I think open source platforms are the way to go. And for me, that was the biggest thing I figured out was probably the DFOs have to use some sort of open source tracking tools. Otherwise, email doesn't work for this shit. Neither does Google Drive. Neither does any other closed source data platform. GitHub is probably one of the best. Git technology is probably the best way to track people's work when you're working for an open source network. That's it. That's my 2 cents.
Okay, so same question to you, Jan. What has surprised you most about being a DIF supervisor?
So, well, as I have been proposal owner for more or less 3 years now, the structure and the DAO does not really surprise me, and same for compliance. So it was a struggle for us at the embassy to get accounts in the beginning too, because we were funded by the Treasury 100%, or still are. For me, the most difficult, maybe not surprising, but the most difficult was or still is to create a strategy for the DIF that is not only working for the DIF as an investment foundation, but is suitable for the network and helps to benefit Dash as a whole. And there we again come to the point that a strategy that's working for all entities in the DAO is in a decentralized way hard to find and hard to agree on. So I appreciate the suggestions from Hytham to go on with GitHub to create a process that allows us to clearly work on something like this, but also get some contribution from the outside and maybe some voices from the masternode owners. I think that's maybe it. It's always surprising for me how different the mindsets of people in the same decentralized autonomous organization are.
All right, thank you, Jan. And same question over to you, Mike.
Yeah, well, I suppose I echo the sentiments of the other 3 supervisors before me. What we are trying to do is, as was set out in the blog post by Ryan when the Dash Investment Foundation was created, we believe we are doing something that has never been done before, and that comes with a unique set of challenges. And the last 6 months or so, probably more now, 8 months, yeah, we've been dealing with those challenges, and every single one of them has been unique, and every single one of them has had a scratch in our heads. But we're getting there. We're getting through it. I always knew that this would be difficult, that this would be hard. Nothing that is rewarding is ever easy. But I don't think I realized it'd be quite this difficult to achieve what just to get where we have already. You know, we've worked very, very hard, and a lot of time and effort has gone into this project so far. But as you can probably tell, up until recently, we've not really been able to show what the DIF's really all about and how good it can be and how valuable it can be to the network, because we haven't been able to get hold of the tools that we need to do the job. But we're getting there. We're nearly done now. We've, as I said today, we've announced that we now have 2 accounts open that we believe are the tools we need to do our job, certainly in the short term. And you know, we have a fantastic investment consultant on board, and we have 2 directors of the DIF in the Cayman Islands who are both very, very seasoned professionals and both experts in their field. That's why Ryan Taylor and the team picked these guys to work with. And yeah, I'm really, really positive for the future of the DIF now. But yeah, in answer to the original question, yes, we all knew that this would be difficult. But yeah, it was even more difficult than I thought it would be. So with that, I'll pass back to Amanda. Thank you.
Great. And now we will hear the same question from Spencer.
Yeah, it was a good question. I had lot of thought about it, actually. And the most surprising thing to me actually so far has been the diversity of the team. And while that seems counterintuitive to think that the team wouldn't be diverse, the diversity surprising me is really due to a lot of things, but it has its advantages and it has its challenges as well. The advantages to having a diverse team, of course, is lots of different thoughts from all over the table, lots of different skill sets, and I see those things as big advantages. You know, part of the challenges have to do with time zones and working collaboratively, you know, across the world. And but other than that, of course, you know, I echo a lot of the thoughts of the supervisors. A lot of challenges that we've seen, you know, we've kind of been left scratching our heads on some, and some we've overcome, and just taking things one day at a time. But definitely the most surprising thing to me would be the diversity, or rather working with the diverse team such as that.
Thank you, Spencer. Okay, and I will answer the question, what surprised me most about the DIF. For me, that would be that the roles that I thought the directors and the supervisors would play have come to be the complete opposite of what their names dictate. I imagined that the directors would design the goals of the fund. I imagined that they would proactively seek to execute on the goals of the fund, and that we as supervisors would receive periodic updates and or requests for permission if something was, you know, like substantial. And that so that, you know, we would more just be like thumbs up or thumbs down people based on whether we thought that what the directors were doing were serving the best interests of the Dash network. And it's been just the opposite. There's no initiative that takes place in the DIF that doesn't first come from a supervisor or from our consultant. And it is up to all of us as supervisors and our consultant to take things from the conception stage to the actual detailing of the plans stage, all the way to we get to something that, you know, we actually want to have as part of our mission, or something we actually want to buy, or an account that we actually want to open. And only then do we send it on to the directors, and they basically determine whether it's legally sound and whether we've conducted our due diligence as thoroughly as possible, and then they sign the papers. And so, in short, I didn't expect to spend nearly this many hours working in the DIF, but of course it has been a wonderful learning experience. All right, we'll move on to the next pre-submitted question. One of the best, this is from Redditor, It's Crazy Bro. He says, one of the best ways to use Dash platform to get immediate value to the network would be applications that better connect the user and merchant and offer fun ways for both to interact. So my question is, have you had many businesses approach you with products or ideas that focus on connecting the user and the merchant? If you want to answer this and I can't hear you, please just put it in the private chat to let everybody know I'm not able to.
I can take one if you want.
Great.
Yep. So so far, we've received a number of investment opportunities, and we have reviewed every single one of them. You know, at this point in time, unless it's slipping my memory at the moment, we haven't received any investment opportunities that have dealt with Dash platform in any regard at this point, let alone specifically that work on connecting the merchant to through the app. So I think the answer to that would be no.
Thank you, Spencer. Okay, and then we've had two questions submitted through the live chat box. First is there a way to legally change the status of one of the DIF supervisors to make them the legal ultimate beneficial owner and give them those capabilities and designations in the next election?
I can take that question. The answer is that we would obviously need to seek legal advice on that. So please don't take what I say as gospel right now. the problem with doing that is finding an investment supervisor, a Dash Investment Foundation supervisor, who'd be willing to actually do that. The practicalities of this is the Dash Investment Foundation supervisor has to think about their own financial situation, and quite frankly, a lot of people who own cryptocurrencies don't really want to be putting their head above the parapet more than they have to. I'm being quite frank here. So the idea of any supervisor agreeing to do this, whilst not impossible and quite possible, it's probably quite unlikely. And then you have to couple that with the fact that from our experience setting up these accounts or trying to set up these accounts, that we may go back to the compliance teams of whatever organization it is we want to do business with and say, hey, yeah, no problem. Joe Bloggs here, he's an investment supervisor and he's willing to KYC and AML. And they'll say, yeah, okay, great, no problem, that's fine. What about the other 5? So it doesn't really solve the problem in that respect. We will still have that problem, if you see what I mean. But based on what I understand the question to be. So yeah, we will take that question and we will of course put it to our directors and our legal counsel on the Cayman Islands, and we will discuss it internally. But yeah, I don't think it's quite as simple as that. But we will certainly put it to our team. Thank you.
Thank you, Mike. I had forgotten to mention that last question was submitted by Halawe S. And now our next question comes from Ray Fernando Verbunen, who says, what is the investment criteria for private projects from the foundation? Are other DAO projects prioritized? So I guess that's like 2 questions. Demelza, you had said that you'd care to answer this one?
Sure. Okay, great. So I'll just focus on the investment criteria question. So effectively what we're looking for is to take minority stakes in companies that are either have small valuations or have up to around 200 million, 300 million in valuation. So we're either looking to do VC investments, early stage, angel seed investments, all the way up to growth capital investments. So we could be looking at firms anywhere from 20 million in valuation to 200 million in valuation. We're not looking at firms larger than that while we are in the stage that the Dash Investment Foundation is in. We are specifically looking at companies that have post-money valuations of 4 to 6 times earnings before income tax and amortization. So we're basically trying to look for good deals. A lot of companies are being valued at 15 times EBITDA, 20 times EBITDA. From my personal perspective, I do not rank those pitch decks very high. I'm looking for firms that have positive cash flows. They have been generating revenues. They have also had net profits. So basically their costs are below their revenues. And they are basically have a post-money valuation of between 4 to 6 times EBITDA. So there's a big problem where basically if everybody thinks that company is a good company, we're not going to be able to get a good price on those shares. And if you look back historically at what made gains for private equity investments, growth capital investments, venture capital investments, the main thing that mattered was the price that you bought in at. So we're really looking for good deals on minority stakes in companies. And we're also looking potentially at the post-money valuation to book value. So basically, if you look at the post-money valuation and you compare that to their book value, which is basically their assets minus their debt, we're looking for a 2x to 3x post-money price to book ratio. So that's basically the specific criteria. We would like to have a 10x gain in the next 3 to 5 years. That's what we're hoping for. And the reason we're hoping for such high gains is because, with private equity, with venture capital, with growth capital investments, a lot of your investments don't shake out in the way you want them to. So you need to be aiming for 10x gains on any given valuation, because it will be on any given investment, because it will be in a portfolio amongst companies that don't succeed as hoped for. So that's basically the criteria that we're looking at, the metrics we're looking at. If anyone has any specific questions on those criteria, I'm happy to go more in depth.
Thank you, Demelza. Okay, and I think we'll finish out with just the second part of that question, if anybody cares to answer, which is, are other DAO projects prioritized?
I can answer that, or I can attempt to. Obviously, I think this is going to differ amongst supervisors. Each one may have a different opinion. My opinion is that, you know, we tend to, at least personally, I tend to evaluate projects based on their own merit, not whether they're a part of the DAO or not. So for me personally, I don't give any type of preference for DAO projects in this role as DIF supervisor. Now, personally, as you know, as a user in Dash, I do obviously give a lot of preference to DAO projects. So, you know, I use DAO funded wallets over other wallets. I use things like Dash Text over Coin Text, just for an example. But as far as this role as a DIF supervisor, I typically personally do not give preference over to DAO projects. But again, every supervisor may be different. And if anybody has a differing opinion or wants to chime in, please feel free to do so.
Okay, great, thanks. So that will do it for the DIF's quarterly call today. Thank you so much for joining us, everybody, and we look forward to speaking with you after hopefully a successful next quarter. Bye now.